Hi, it's Joe Mazumdar from Exploration Insights. I'm at the Metals Investment Forum, the January 2025 edition. Happy New Year. With Liberty Gold COO, Jon Gilligan. Jon, how's it going? Jon, you just gave your presentation at the forum, almost full capacity audience. I mean, this project's been around for a while. We've held it in the portfolio for a while. Leaving the presentation or listening to it, this is the year we should be really excited about Liberty. So what are some of the reasons we should be excited about Liberty Gold in 2025?
Well, Joe, thanks very much for the invite to come on. We're similarly excited about 25. I think we published our pre-feasibility study late last year, and that allowed us to write the mine plan of operations, which is a key document that starts the US permitting process. And once with that in hand, we then can start planning technical work to get to feasibility. And of course, that's necessary to go and raise money for the project. So 25, in short, is going to be a story about pushing ourselves through the US permitting process and starting feasibility study on Black Pine.
And when you were talking about a Black Pine, there were certain components of it to get to the feasibility study, which is a big catalyst. And
right.
Was it Q3 25?
Q4 25 will start feasibility.
And so one component was more drilling.
Yep.
To expand the production profile. I think it's beyond year 8.
That's correct.
Yeah. And so that's something that you need to do now in terms of upgrading some of your resources into the indicated?
That's right. We had a 3.2 million ounce reserve in the pre-feasibility study. We want to take that reserve to about 3.5, 3.6, and that allows us to sort of flesh out that later life production schedule. We had great production early on in the pre-feasibility production mine plan. The back end was a little light, and so we've identified where to drill to fill that back end piece. And the next, basically the next 6 months, we'll get 2 drills in the field in April. And we'll be doing inferred infill to upgrade to indicated to allow that to go into reserves. And we'll also be drilling the margins of some of the bigger pits to expand those pits out a bit to bring in some more material into resource and ultimately into reserve.
So the payback looks good because the upfront capital right now is about $330 million.
That's correct.
US, and the first 5 years is about 185,000 ounces a year at about over $1,200 all-in sustaining cost.
That's spot on.
So life of mine average, how does it change when you fill in that gap, 2008, for 5 years beyond 2008 or so?
So that'll go up to, the target is to get to 150,000 ounces a year.
Life of mine.
Life of mine.
And that's like
year on year
years?
on year. That's it, right now it's 17.
Yeah.
I think we'll probably extend that a little bit, but it'll be 150 flat, but with a bigger front end. Okay. So we want to make ideally 200 in that front end. That gives us that really nice payback. 3 years at $2,000 gold, 1.5 years at 2,600. So pretty attractive at current market prices. We want to build that up front, and that obviously that lets us pay back the investment, and then everything else from there, from an investment point of view, is gravy.
So in terms of the feasibility study coming up, for those that have seen the PFS, which was recent, what kind of changes should we see? Is it mostly just the change in the production profile? Because I can't see the capital estimate changing significantly in 6 months.
So I think the key, so you're absolutely right. The resource is the resource. We're not going to fundamentally change that. And we may expand it a little bit, but the pits will be in the same place. It'll still be a multiple pit, open pit mining operation feeding a run of mine heap leach. So no crushing, no agglomeration. So exactly the same process. I think the things we want to test in feasibility are the production rate. Pre-feasibility had a 50,000 tons per day feed rate onto the pad. Yeah. We think 65 might be the right number if we expand the resource. And that is simply the addition of 1 carbon train in the ADR plant. So the 3 trains now.
So it wouldn't be a big capex.
No, it's under $10 million to go to that increase. So
you just got to find the material to put in there.
That's right. Okay. We could shorten the mine life. We could do it that way, or we could use that additional $500,000, fill the gap, and go to 65. That would be a big impact on the production schedule.
Okay. Is that the throughput you need for year 8? to get you that production profile?
We could. That's the other way. We could expand midlife and go to a higher rate that would help us in that. Okay. That's another one of the levers we should be pulling. Will be pulling in fees.
Right, but right now the concept is 50,000 tons per day.
That was
with more.
That's
resource.
correct. That's correct. So increase in production rate is one of the key factors, I think, in feasibility. We want to look at autonomous haulage, autonomous mining as an option. We went with a fully conventional diesel mine fleet, so diggers, loaders, and conventional trucks, diesel trucks. I think we want to look at an autonomous version of that. What does that do for us?
But autonomous meaning autonomous electric?
Yes, that's correct. Okay. Yeah, and we're talking with some of the OEM right now about what would that mean, and we're going to get into, in the next 6 months, a number of workshops doing some conceptual work on that, to see if it makes sense. And if it does, well, then we have the option to bring that in at feasibility.
I know Nevada Gold Mines is doing that in some of their operations in Nevada. Is Marigold, is SSR Mining doing that in Marigold?
I don't know what they're doing. They're not doing it right now, yeah. I know that. I would imagine they're looking at it, okay. but I don't know. I haven't got a feedback from them on that one.
Okay. And this is obviously infrastructurally good. I mean, your infrastructure access is so good that this is a concept you can add.
Very definitely. The key challenge for that electrification piece is energy supply. Yeah. As you said, we have a power line right to the front gate that we know we can pull 10 megawatts off, and we've got all that in place with the local utility. That's enough to go to 65,000 tons a day operation with a conventional fleet. If we're going to go to electrification, we need quite a lot more power. And we're starting to do that power study now with the utility to see what's available on the line.
Right. And so what are the other benefits and risks, I guess, with electrification and automation? Well, we don't have drivers.
Yep.
No diesel exposure.
That's correct.
Is the actual unit more expensive? And do you have to replace it more often? Or is it within 3 to 5 years in terms of the batteries? Or how does it work?
So I think there's two key risks right now that we see in terms of going to an electrified haulage fleet, because electrification of loading is pretty well known. Yeah. That's not a risk. It's just, do you have the power? Number one is the gear going to be available in the time frame for us? As I said earlier, we want to be moving dirt in 2028.
Right.
What we're hearing from the OEM is that that's the window in which the first models are going to be available. So we as a company would be taking that first user risk. Right. Do we want to do that? First mover advantage or first mover risk? So that's a thing for us, I think. We need to work through that. And secondly, can we get the power? Is the power available? Because we would need another 30 megawatts.
What do you need now?
We need 10 now. We've got that. We would need an additional 30.
Wow.
So that's a lot of power. Don't forget, you're replacing all of that fuel burn, diesel fuel burn. You're replacing with electricity. So is it available on the grid? Can you transmit it? There's a whole bunch of questions there.
Does it make permitting any easier with respect to emissions?
Look, I think it does. I think it gives you a better complexion, for want of a better word, right, with the authorities. Right. The authority, the federal agencies, BLM in particular, have a very strong environmental mandate to protect. Right? And that permeates all of their decisions. So the more that you do, as a proponent offering to mitigate, the more they're disposed to listen to you. So I think there's a good conversation around that.
So in the feasibility study, you've got potential throughput changes, automation, electrification. Is there another thing that you're looking at?
So I think stockpile strategy is probably a key one. A little bit technical, but how much material we put on and off stockpiles.
The rehandling.
So it's a buck 35 to rehandle, and we have a stockpile that's 90 million tons in total. So in our mine plan, we got $120 million mining costs of rehandle. Yeah. If we can reduce that, that's real money, real value on the bottom line.
So if we look at the haulage using diesel versus what's the cents per ton?
The OEM are very cautious about saying anything. Let me give you, I had quite a deep experience in developing autonomous haulage when I was with BHP working with Caterpillar. And they were saying at that point, back in the early stages of development, which is similar to electrification now, that was a 20% reduction in operating cost. So if battery electric is of that similar nature, it's for us as a low-grade deposit where we're a margin play,
that earth-moving exercise,
that makes a massive difference to us.
Yeah.
That potential 20%.
Right. And in terms of comping this at the scale you're trying to do, who else is doing it at the scale of potentially 50 to 65,000 tons per day?
So Marigold, I think Marigold's call is 60,000 tons a day. They go up to 100. Round Mountain, Bald Mountain were of similar size, but not many. It's a very large, solid tier 2 asset. It's going to be a big mine. Total material movement is going to be something like 150,000 tons a day,
right?
Which is a good sized mine. I mean, not the largest by any means, but a good sized mine.
Well, while we still have a little bit of time, let's just move a little bit to more of an exploration play within your portfolio, which is Goldstrike.
Yeah.
You're not advancing the development of that right now because of water issues there, but there's an exploration target there that's related to potentially the ban of antimony exports in China. So can you tell us a little bit about that?
Yeah, I mean, that whole critical metals piece has exploded in the last few years. And I think probably the big one was exactly as you point out, the Chinese ban on antimony exports and now other metals, of course. And that prompted us and others to say, well, hang on a minute, let's have a look at our portfolio. And we were fortunate enough to realize that we did know about some antimony mineralization. The Goldstrike deposit sits on this broad arcuate structure. And at one end on the eastern margin of this structure, we've got historic antimony mineralization. There's a previous small-scale antimony mine. And we'd sort of focused on the gold because we weren't antimony people, and antimony back in the day wasn't worth very much. So we went back into the field and we confirmed the presence of massive stibiconite, which is oxidized stibnite, on a jasperoid breccia. This thing's got a variable width of 1 to 40 meters. It's got a strike length in excess of 2 kilometers. It's a bit broken up because there's a lot of structure in the area, but we've resampled. We've got hand samples above 5% antimony in large hand samples. We've taken a couple of bulk samples that are in the Met Lab now doing gravity work and flotation work. In early preliminary results look like, yeah, it's stibnite, and yeah, you can float it, and yeah, you can gravity separate it. So sort of an early positive. We're going back into the field in a couple of weeks to do some more detailed mapping to really understand the two-dimensional picture of the jasperoid. Next step is to drill this thing. Not a drill hole on it ever. We've projected it down dip at about 20 degrees along a volcanic sedimentary contact, which means that if that's true, a very easy open pit target, nice little low strip open pit target. And, if you look at the total potential of the area we've got, the footprint, it has the upside potential of being a significant antimony producer. Right. So we don't want to get too crazy about it, but certainly of interest.
Yeah, given the amount of money being potentially dished out to Perpetua to build their $1.2 billion project, mostly for the antimony credit. Yeah. It would be very interesting.
I mean, logically, what we would do next, I think, is finish our field work, put together a package and see if we can get some government support. There are funding programs, and I believe they will continue for juniors to develop antimony deposits. So I think we would want to get involved in that.
All right, so that's Liberty Gold. Your cash position, roughly?
11 million at last reporting period.
U.S.?
Yes.
And you're fully funded for the upcoming feasibility study?
We are funded through, we're funded through this year. We
will get $2 million from the divestment.
We get $2 million from our Turkish company from the sale of TV Tower. That comes in October, so that underpins our G&A costs nicely. Yeah. We're going to have to look at options going forward. How are we going to fund this whole thing through to construction? So that's 3 years away. So we got to do that. The Goldstrike piece, I think, with antimony gives us some strategic options. There's one option. I think there are a number of other options that we have in front of us. And the CEO, Cal Everett, and I are working through how do we do that? What's the next step for us?
All right. Okay, that's Liberty Gold. Jon Gilligan, COO. A lot of things to look forward to in 2025. Thank you, Jon.
Thanks very much, Joe. Thanks, everyone.